Why is Phil Fisher so important again? You said that you because even I want to know.
Oh, okay. Yeah, totally. So what Phil Fisher basically is bringing up is the fact that what's a good example? Well, here, this last investment I did in Summit Therapeutics is a great example where you have where it's basically like you're trying to find a thing in the market where the market isn't able to price it very easily. And there's it's very similar to finding like an antique lamp on Craigslist for $10. You're looking for something that you know is quite expensive that is selling for cheap right now. And that thing could sit on Craigslist for, a month or whatever. It doesn't mean that's not a very, very, very valuable antique lamp that's being sold for $10. The problem is you have to know it's an antique and it's essentially, it's a very valuable lamp to the right, group, not to a regular person, but to someone who's a collector or something of antiques and stuff. So it's the same concept. Basically, you're looking in the stock market for something that, like an antique lamp, for example. Most people wouldn't be able to tell an antique lamp that has a lot of value compared to their grandma's lamp. You have to know. So some stocks are in that position where biotech's a great example. There's no cash flow. So how do you price it in? The market really it doesn't price in that, as opposed to maybe a Walmart or something like that, where you can do a discount cash flow model, project out, and it's very steady. And it's very hard to find a very good buying opportunity to get Walmart stock 50% off. But in biotech, if you know how to price it well and you're pretty good, you can find significant discounts in the biotech world that just because the market is struggling. So that's sort of the concept in terms of Phil Fisher, is you're finding something that the market doesn't have enough information or just hasn't dug into it enough or whatever. And it really is it's not giving a realistic price, but later over time, the market will realize, through whatever catalyst events or just through time and whatever natural process, that company is very valuable, or vice versa. You could be shorting. I'm not big on shorting, but I'm open to shorting. You could, have that. You're very likely to have that happen. So that's kind of the basic thing. I mean, Phil Fisher's, I think, most famous investment was like Nokia. He held for a long time. I think Charlie, Warren's partner, Charlie, I'm forgetting his last name. Charlie, Warren Buffett's
Charlie Munger.
Munger. Yeah. So he famously had his. Thank you.
I was going to say Charlie Brown. It's Christmas.
Yeah, this is a Charlie Brown show, right? He famously had his portfolio as what is it? A third of his position was in Costco for 30 years or something like that, because he got in when it was called Priceco I think it was the 80s. And similar thing, he dug into it. He knew the model could scale. They had already done multiple branches of Priceco, which then switched their name to Costco. And he knew it could scale, and it had decades of scaling. He had great management, blah, 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 everything that. So he took a large percent. And as that grew, he was fine. He knew that the investment was a great investment. So that's another example of that kind of philosophy. But there's other examples as well. Obviously the CEO investing a large amount in his own stock, like in Summit Therapeutics' case, is a good example where Bob Duggan, the owner, has a large amount of the company owned, and that has increased his net worth by at least 5x, if not